All right. Happy Thursday. Welcome to the May market update. I'm Jason Yarusi of Yarusi Holdings. Thank you for joining us. Of course, go over to yarusiholdings.com to learn more about us, our firm, and our offerings. From there, we would also like to let you know that coming up pretty quickly on us next week, June 2nd, 3rd, and 4th is Multifamily Live. It's our multifamily event. We're looking forward to have a couple hundred of you joining us down here at the Opryland in Nashville. If you want to learn more about that event, you want to find yourself a ticket and find your way here to join us and learn a lot about what others are doing to really go out there and crush your goals, whether it be going into a larger property from where they currently stand or buying their first multifamily investment. Come surround yourself with a lot of like-minded people, all trying to grow, trying to engage, and trying to be better upon themselves and learn about investing in apartment buildings. You can find more about that at multifamilyliveevent.com. You can also find links to it over at our website at yarusiholdings.com. So, man, it's been just a continuing of just very, very incredible numbers here as we go into the end of May. I pulled up and am looking over the CBRE market research report for multifamily in Q1, and we've just continued to see massively strong numbers in the multifamily market. For Q1, the vacancy trended to be down to 2.3%. We had over 292,000 units come on as completed units. The year-over-year rent growth is at an astronomical 15.5%, with seeing some markets at as high as 30% that you see over there in West Palm Beach. And the investment volume really totaled over $63 billion. So a lot of this is driving here. A lot of the rent growth is really being seen down here in the Southeast, along with the Midwest, trending region by region as high as out in the West. We're seeing San Diego at 18% over in the West here. Also, we have Phoenix as high as 25%. A lot of this growth is targeted down there in Florida, where you have West Palm Beach at 30.4% for first quarter, Tampa at 27.6%, Orlando at 27.1%, Fort Lauderdale at 27.1%. Pretty much down here in the Southeast, the top 6 of 18 all are above 20% and all targeted there in Florida. The only property or the only city in the Southeast to not achieve at least 10% rent growth was Louisville, Kentucky, at a very close 9.9%. So just been incredible to see the rent growth here. It's going to be interesting to track the price inflation that we're seeing, the rent inflation that we're seeing side by side on the wage inflation. As much as we've had so much money push into circulation, it's, of course, increased values across properties, also pushed a lot of things into rent. And honestly, with just the interesting dynamics of what's happening into the stock market, we're seeing a lot of money continue to move into real estate investing and just into cash flowing assets here. So I want to dive into this report. We have had just some very, very interesting things here to look at. I want to make note that with the new supply coming on board, some of the top markets, again, we're all targeted to Texas. New York has jumped back into the arena here with New York, Houston, Dallas, Austin, and Washington, D.C., basically leading the markets with the most new supply coming online. As noted, we are at a vacancy rate to a record low of 2.3%, with 17 markets having rates below 2%, led by Newark, New Jersey, Madison, Wisconsin, and Providence, Rhode Island, was just unbelievable. And down from 20 markets in Q4, down to 11 markets have had vacancy just at or above 3%. So of the markets tracked here, about 58 markets, you have the majority of them that are trending at a sub 3%, which is another addition to why we're seeing such a growth year over year in rent change. So where that stops, nobody knows. It's going to be continue to be interesting as we see the Fed choose to continue to make choices going forward on rate adjustments. The 1 month SOFR month over month from about 1 month from prior to today was at about 0.68. I believe it's at 0.92 or 0.97 today. The Fed has made note that we will probably see another 50 basis point bump coming into this next meeting here in mid-June. So we will continue to see interest rates rise, and with historically low cap rates continuing to trend below 4%, it will be a choice where we'll either see some lessening in valuations, or investors will choose that they will be okay with lower returns. And so time will tell on that. So as we look forward here, it's continuing to look, I'm going to push down here into Q1 multifamily investment volumes. We set another record here. Multifamily investment volume increased by 56.4% year over year to 63 billion in Q1. That's the highest total on record. We do need to note that there was a number of transactions in 2020 that got delayed or got pushed off with COVID and pushed into 2021. So in terms of this year, I would be surprised if we amass more on top of that, or beat that number, with so many transactions getting squeezed into that year, and just with the low amount of supply, and then also just the, we'll say, aggressiveness and changes in rates, and just the inconsistency for what we're seeing out there into the lending markets. There's a number of lenders who are stepping to the sideline right now, or just trying to watch a landscape, or have completely changed their parameters as well to just to what their threshold may have been even as short as 30 or 60 days ago. So multifamily accounted for 37% of the commercial real estate volume in Q1. Second to that was office at 21% and industrial at 20%. So again, multifamily is a strong driver. A lot of people are continuing to push in that space. The Sun Belt topped markets for investment. Dallas-Fort Worth led all metros with multifamily investment over the past 4 quarters, with 229 billion in total volume. Double the amount from a year ago, and accounting for 7.8% of the U.S. total, which is just outstanding. Atlanta, second highest. We've 2 assets and soon to be a third, right down in those markets, in those sub-markets there in Atlanta. It's been a great market for us. We've loved to see just the path of progress. We've been afforded some of the luxury of seeing some of that rent growth come down through the path of progress. Only 2 of the top 20 markets for multifamily investment over the past 4 quarters did not post gains of 100% or more from the prior year. And that is, in terms of volume of investment, that's DC and Charlotte. And Charlotte would be a surprising one to see on there. I'd have to look into that more to just better understand what's driving that and what would hold that off. But that would be something to note, if that was just an anomaly, or just or it could be the start of a trend for some of the Southeast markets. And it's looking to be a strong rebound in investment volume for the coastal markets. We saw the coast, New York City, our San Fran's get hit very big during COVID. A lot of pressure pushed for people leaving those markets. But I had an analyst on our podcast a few weeks ago. You can go over Multifamily Live podcast, talking about some of the overheated markets versus markets where there is now a ton of potential. And funny enough, we were seeing that California and New York were markets that actually had lower risk and more potential, based on just how big of a dip they had taken back from the last 2 years. Another thing going in here is that with the higher cost of capital, we've seen loan ratios decrease. So the loan to value ratio has continued to lower compared to just what is being possible with the new interest rates and the increase in value. So that's something to note if you are looking at investments, is that if predominantly before you were targeting 70 to 75% leverage, some of that same underwriting with new debt terms may push you basically where the bank feels comfortable to be in that 60, 65, 70% range. All right. So that's a lot to cover. Happy May. Happy hunting out there for investments. We would love to hear more about you and your story. If you want to learn more about investing, please come over and find us at yourusieholdings.com. You can learn more about what we're working on, our business plan, set up a call for us to talk about you and your investments and your investment strategy and what you're looking for in opportunities here. And you can find everything about our podcast and, of course, Multifamily Live coming up just next week, June 2nd, 3rd, and 4th. You can find us there. All right. Happy Thursday. Have a great couple days. We'll talk to you next week.